All right, let's talk about something that can make your heart sink. You go to the mailbox, you see that envelope with the IRS return address, and yeah, you open it up and you just flat out disagree with what they're saying. Well, believe it or not, that letter is not the end of the story. So, what do you do? That's the main takeaway right here. If you think the IRS got it wrong, you absolutely have options. This is not a one-way street where they just tell you how it is. No, there is a formal process, a system in place, and this explainer is basically going to be your roadmap for how to navigate it. So it all starts with that piece of paper. It feels official, it feels final, and it's definitely intimidating. But you gotta see that letter for what it really is. And this, right here, is probably the most important thing to get into your head. That notice you're holding, it's not a verdict. Think of it more like an opening statement in a debate. It's the IRS saying, here's what we think, which gives you the official chance to come back and say, well, here's what I think. It's the start of a conversation. So where does this conversation, this debate, actually happen? Well, it happens in a very specific place inside the IRS that's set up just for this kind of thing. It's called the Office of Appeals. Now, you see that word right there, independent? That is the magic word. The appeals office is your chance to get a completely fresh set of eyes on your case, someone totally separate from the department that sent you the letter in the first place. Their entire job is to settle these disputes.
So, what does independent really mean in practice? It means the person you're talking to at appeals is not the same agent who audited you. They're totally separate from the compliance folks. Their job isn't to just rubber stamp that initial decision. It's to look at the facts, look at the tax law, and find a fair way to resolve this whole thing, ideally without ever having to go to court.
And look, you don't have to take my word for it. This is right from their own mission. They want to settle cases fairly, efficiently, and avoid going to court. That tells you something huge. The system is actually designed to find common ground. The IRS would much rather work this out with you than get into a long, expensive legal battle. But, and this is a really big but, there's a catch. The appeals process is only for when you disagree with the IRS about the facts of your case or how they're applying the tax law. It is not for situations where you're like, yeah, I owe the money. I just can't afford to pay it right now. That's a different issue, a collection issue, and it goes through a whole different channel. Okay, so you've got a genuine dispute about the facts or the law. How do you actually kick this whole process off? Well, that brings us to your first major decision point, and it all comes down to a very specific number, 30. That's the first number you need to sear into your brain. See, after an audit, the IRS will very often send a letter that gives you just 30 days to respond if you disagree. This is your first and, honestly, your best shot to get into the appeals process smoothly. And that letter is called the 30-day letter. I want you to think of it like an invitation. It's the IRS basically saying, hey, before we make this official and start the legal clocks, would you like to have a chat with our appeals division? Saying yes to this invitation is your most direct and least complicated path to getting this sorted out.
But what if you missed that 30-day window? Or what if you just never got one of those letters? Well, things don't just stop. The process moves on to a much more serious stage and a much, much stricter deadline.
So you see how this works? The 30-day letter is that informal invitation we just talked about. But if you miss it or if it wasn't offered for your case, you then get the 90-day letter. And that's when a very real, legally binding clock starts to tick. 90. If that 30-day deadline was a friendly suggestion, this 90-day deadline is an ironclad rule. This countdown is not a guideline, it's set by law, and you absolutely cannot afford to ignore it. This thing is officially called the Notice of Deficiency, or as most people call it, the 90-day letter. This is the letter that makes the IRS's proposed changes official, and it starts that 90-day countdown. You have exactly 90 days from the date on that letter to file a petition with the U.S. Tax Court. If you do nothing, once those 90 days are up, the IRS has the legal right to assess the tax and start trying to collect it. Okay, so let's say the appeals process doesn't work out, or you just have to go to court. The fight still isn't over. You still have choices to make. So if you do end up in a legal battle, you still have some control. But now you're facing a really fundamental choice about where you're going to make your case. And more importantly, how.
You've basically got 3 places you can go, but they are divided by one huge factor: when you have to pay. See, with the U.S. tax court, you can argue your case before you pay the tax the IRS claims you owe. For the other 2 courts, you have to pay the disputed tax bill first, and then you sue the government to try and get your money back. And this is the whole ballgame right here. Tax court is your pay later option. Every other route is a pay first option. For most people, being able to fight the tax before you have to write a massive check is a huge, huge advantage. And that is exactly why that 90-day deadline to get into tax court is so incredibly important.
So here's the bottom line. When you get that letter, take a breath. Don't panic. You need to understand that there is a system, a whole process designed to give you a fair shake, from the independent appeals office all the way to the courts. The process exists. The only question left is, now that you know how it works, are you prepared to use it?